Welcome to Big One Weekly News Update. I'm Gavin. Global financial markets faced intense pressure last week, marked by a sharp retreat in high-valuation technology stocks and a continued cryptocurrency downturn. With risk appetite weak, investors largely moved to the sidelines, waiting for clearer liquidity and sentiment signals before re-entering risk assets. Crypto markets retreat below key thresholds. Digital assets steadily gave up ground last week. Bitcoin, BTC, slipped below the critical $60,000 mark, falling nearly 7% to close around $59,400. Ethereum, ETH, dropped approximately 9%, ending the week below $1,600. Solana, SOL, and Hype, SOL, dipped 3% to settle near $70, while Hype pulled back by 9%, but stayed above $61. A prevailing wait-and-see approach dominates, indicating any sustainable short-term rebound requires a more convincing influx of market liquidity. Tech stocks cool off as valuation pressures mount. Volatility in global equity markets spiked in June, driving blue-chip tech shares to their harshest weekly contraction since last year's tariff announcements. Within the Magnificent Seven, Nvidia and Google both endured 5-day losing streaks, shedding close to 9%. Elsewhere, SpaceX plummeted over 17%, and Oracle plunged more than 19%, its worst single-week rout since 2001. These drops dragged the semiconductor index down over 5% and forced the S&P 500 into its longest losing streak in 10 months. Crucially, this does not appear to be a broad-based panic. Small caps and the Dow Jones held up relatively well, implying capital is selectively rotating out of heavily extended, high-valuation tech names. Meanwhile, a downward shift in the 2-year US Treasury yield signals that bond markets are actively recalibrating Federal Reserve policy paths. Institutional US Bitcoin demand weakens structurally. A significant catalyst for digital asset pressure is the unrelenting drain of capital from regulated US investment vehicles. US spot Bitcoin ETFs experienced massive aggregate net outflows, totaling $1.7873 billion over the week, with BlackRock's IBIT alone accounting for a record $1.3035 billion redemption. Compounding this, the Coinbase Bitcoin Premium Index has remained firmly negative for 40 consecutive days, recently hovering around minus 0.1569%. This prolonged stretch suggests that subdued buying demand from US investors is a persistent structural narrative across the first half of the year, rather than a temporary blip. Legislative and foundation roadblocks. The Clarity Act stalls. Prospects for a comprehensive U.S. crypto market structure framework passing in 2026 have hit a major roadblock. Political friction spiked after President Trump indicated he would veto an upcoming housing bill unless Congress passes the SAVE Act. This maneuvering has congested the Senate legislative calendar, pushing crypto regulation down the priority list. Ethereum Foundation layoffs. The Ethereum Foundation announced a major organizational shakeup, laying off roughly 20% of its staff, 54 people, while co-founder Vitalik Buterin confirmed a sweeping 40% budget cut. This downsizing comes amid extended market underperformance, with the ETH-BTC ratio decaying to levels last seen in 2020. MicroStrategy and STRC depeg ignite leverage concerns. The structural vulnerabilities of crypto-adjacent equities came under scrutiny as MicroStrategy, MSTR, plunged 26.86% for the week, breaking below $100 and hitting a 2-year low. This aggressive sell-off was deeply intertwined with STRC, MicroStrategy's perpetual preferred share product, which suffered a severe depegging event, dropping far below its $100 par value to briefly touch $70. Investor anxiety intensified following reports that MicroStrategy broke its historic never sell mantra by offloading Bitcoin as market prices slid. Though the company's recent redemption of $1.5 billion in convertible debt generated short-term gains, it drastically stripped away the core capital safety cushion. MicroStrategy's liquid cash runway shrank from a comfortable 30-month window to less than 8 months. With STRC carrying a daunting monthly interest burden close to $100 million, the fear is that the company may be forced to liquidate Bitcoin into an illiquid market to fund these yields, risking a cascading feedback loop. The week ahead. Quarter end and non-farm payrolls. Market participants should prepare for heightened volatility as the week bridges crucial quarter end and half-year end portfolio rebalancing windows. Furthermore, trading volumes are expected to thin out ahead of the Friday closure of U.S. equity markets for the Independence Day holiday. On the macroeconomic calendar, Thursday's release of the June U.S. non-farm payrolls NFP report is the vital focus. A softening jobs print could bolster market conviction for an upcoming Federal Reserve interest rate cut, offering a tailwind to risk assets, while a hot employment figure could reignite restrictive interest rate worries. For cryptocurrency specifically, the core focus remains observing whether massive institutional ETF outflows finally taper off, and whether Bitcoin can securely reclaim the $60,000 level. Join Big One today and take advantage of the growing cryptocurrency market.